on? Welcome back to another Telegram video. Hope you're well. Firstly, let's jump straight into the dollar like usual. And I want to just zoom out slightly and talk about what happened when we had our first COVID wave. Now, the dollar acted as a safe haven currency. Now, if you just take a look at this highlighted section of here, you can obviously see that yes, we had that nice little sell-off on the dollar straight to 95 before having a straight push up into that area of 102, 103. Okay, yes, everyone came out of lockdown, we saw that correction, all good and well. Now, the fact that we are potentially approaching, or actually in our second wave of COVID-19, we need to try and trade accordingly, right? So we want to know how to trade around this, what we can use to our advantage, and what's going to happen really. Now we can already see at the start of this week there's been a lot of fear around numbers in the UK, numbers globally. I mean, we've seen India hit 5 million COVID cases. Yes, we actually had a debate on the trading floor. One thing that we need to factor in is that they have a very, very high population. So if I'm not mistaken, they have over 1 billion people living in India. So in terms of the percentage ratio of people affected, it does line up in terms of smaller countries having lower numbers, etc. So it's not really relevant for us to say that it is very severe in that regard. However, it is still bad. Unfortunately, they don't have the resources, they don't have the technology that all the other first world countries have. So yes, that means they will be worstly affected in all honesty. So that means that they won't have the resources to build as much hospitals as China, the UK, US. So yes, it is sad. So a person now needs to try and just think about, where is all of this going? And it might sound weird, but I look at the COVID numbers every morning. I want to know what's happening. And something people don't talk about, in the news especially, I mean, we all know that the news likes to bring about fear. It likes to bring fear into people's eyes. And if we just think about what's been happening and what people talk about in the news, no one ever talks about the recovery rate. And that is something that quite shocks me. And we have had a very high recovery rate around COVID, really. And if you take a look at normal deaths around a normal flu, or just average deaths globally every year, it's actually insane how much fear has been cast around the pandemic. Yes, it is severe, but is it as severe as the media is making it out to be? Probably not. However, that is something that we're dealing with. Fear drives the markets, and we need to just try and trade accordingly. So we had a nice little push in the dollar yesterday. Okay, there again, dollar being a safe haven currency. During these times, we saw a nice little move in the yen as well. We need to now think to ourselves, what's going to happen? Where's price going? And how can we jump on the back of that? So every little dollar cross, personally I caught a nice little Aussie short yesterday. Every dollar cross had that sell-off. Talking about cable, euro, Aussie, all had that sell-off. Okay. Now the question remains, how far is this going to continue before having some sort of correction? And like I keep reiterating, how can we jump on the back? So daily very bullish. There again, nice little inverse head and shoulders where we had that little break into the high, resting on that 92.76. 4 hour, okay, we had that very nice impulsive move yesterday into the high, straight to that level of resistance at 92.80. Now, one thing I would like to see, in all honesty, is some sort of correction. So back to the 4 hour, I would like to see, if we were to fit the significant low to significant high where we are right now, if we were to get some sort of correction into 93.20, or even worst case scenario back to 93, I wouldn't be shocked, you know. The fact that the dollar index has been magnetizing itself to 93 these past few trading weeks is actually incredible. Funny enough, I had this conversation with someone saying that it could be pegged to 93. But right now, we need to understand that global fears of the second wave have risen up. It has arisen that everyone is panicking on a potential second lockdown. We've got Boris Johnson speaking in about 1 hour, 12 minutes here in the UK, based on what his projections are going forward. Okay, and there again, fact that Boris Johnson is speaking today, we know that the BOE has a very big stance now on employment. Their main goal is to just monitor employment, and their fear was furlough is ending in the end of October, which means whatever Boris Johnson says today is going to dictate what happens to the pound, which will definitely dictate what happens to the dollar. So if we have a bullish pound, then we're going to see dollar index back at 93.20. If Boris Johnson comes out with dovish comments, a dovish tone, saying that they haven't thought about furlough yet, or saying that yes, curfew is going to go into place, pubs, bars, restaurants, but furlough will be extended. That word extended is very, very optimistic for the UK economy in general, and the BOE won't need to take action and put us in negative territory on our rates. Yes, I know there's quite a lot to think about. Play the video back if you want to just listen to that again. It's very, very important to understand the sentiment around what's happening right now. Okay, so right now the dollar pre-US is on its legs, waiting for Boris to see what's happening with the pound, because there again we are going to see that transfer of wealth, that shift in money between currencies. So that is personally what I'm waiting for. There again, today is Tuesday, so there's definitely going to be some major setups lining up. So if we were to get some sort of correction, so let me just put this out there. So that's one base level that we could retest, and then 93.20. So I'm looking for the dollar to come anywhere in this region. Before then, looking for longs on the dollar. Euro dollar means we could then get a nice little retracement back up into the higher than with intraday fib I drew on the trading floor. If we were to get some sort of correction on the euro back into 118, I'll put that out there, 118 would be a nice little place to short euro from. And there again, like I keep saying, you're looking for an area. So if price was to come into this little area, then anywhere in that blue zone gives you the green light to go ahead and short. If you feel we're gonna have a dovish pound leading into Boris's speech today, then feel free to short euro dollar, because that is inevitably going to entice a strong dollar, pushing euro lower. But I wouldn't encourage you entering now pre the event. If you are in the trade, great, ride it out. I know a few of the traders, or one trader messaged me actually yesterday, catching a short from 118,400. It's a very, very good job. There again, the fact that we've seen such big moves so early in the week dictates and shows us that we are going to have a very, very good trading week. So there again, it's all about direction. As long as we have that direction early at the start of the week, then it should be a very profitable week. So euro back into those highs, and there again, I'm looking to run the euro down. I've been waiting for 117 for quite some time now. So if we were to see 117 break, then inevitably I'm looking at 114,500. But there again, all dependent on where the dollar will go, how long the bullish run will sustain. If we were to see 97, 97.50 on the dollar index, then 114 won't be a problem on the euro at all. There again, traders, bear in mind this is just the direction. That does not mean if you've missed a trade in this that you've missed the whole move. There's still so much downside. Back to about 114,500, looking at almost 290 pip trade. So your job now and your whole goal and mindset going forward is to, if this follows through, is to just look for the highest place to sell from. So just keep selling the rallies. This fib is still in play. So from significant high to significant low, we had that correction in 118,500. There again, looking for that 117 as a personal intraday. Once that breaks, and you can look 116, 115.50, and so forth. Personally, I was in the Aussie. Where is that? Yeah, the Aussie for sure on the highs. And there again, I'll briefly run through that. It's not rocket science, very, very easy trade. Straight through 73. I was short from the highs, if anyone remembers from a previous video, 73 was my target. And there again, I knew 73 is a major level. Daily time frame, okay? So we obviously had that short into 73, consolidated for quite some time. Now, what gave this trade away, and I actually mentioned this in the trading floor, was the fact that dead volume is a free trade. It literally is screaming for a free trade. Okay? 1, 2, 3, 4 trading days, dead volume, very small bodies. Yes, we had this pin bar. It's not about what it is, it's about where it is. Straight rejection last week Friday. Okay. 4-hour time frame, we can see the structure was still relevant. This previous higher low swing was broken and we printed a new low. You literally use your Fibonacci from significant high, significant low, target 1, target 2 met. Very easy trade. Question remains, has the trade now been and gone? What are we looking for to short again? Personally, looking for that 72.60 to short on the Aussie again. And there again, that's just me looking for the highest place to sell from to ride the wave in that direction. In my opinion, this is all running right now. Yes, I'm going to go to the Fed later this week. This is all running off the back of what's happening with the pound right now. If we have a dovish pound, then feel free to short the Aussie. If we have a bullish pound, and expect that correction in the Aussie because we are going to have that correction in the DXY. I know it sounds complicated, but feel free to play that back and just hear me out because this is very, very important. So that was the Aussie dollar CAD. Great trade straight back into 133. There again, if you don't understand inside bar formations, please go and learn them. I know it sounds like a basic technical pattern, but it's very, very important in these current conditions to understand price action, to understand that we are going to have those impulsive moves. Price is going to consolidate before the continuation. Sorry, I just had a sip of my coffee there. Before we have that continuation. Now we had that bullish move, correction, you're looking for the lowest place for the buy. Bullish move, correction, you're looking for the lowest place to buy. Now how you use an inside bar is using Fibonacci from significant low to significant high of that session. And there again, once that's been priced in, there was almost 150 pip move into the high. Your goal is to buy from the lowest possible point to ride the wave. And there again, targets have been met. Now, my whole thought process going into this is that, okay, previous trading day was very bullish. That indicates to me that price could potentially continue in that direction. Or, on a 4-hour, I need to now understand that, okay, price is resting on that 133.400, okay? Straight into that level of resistance. Price is resting on that high. Are we going to get a correction? If we do get a correction, more than likely you're going to see that 132.400. So feel free to draw your fib from significant high-low swing all the way to the high, and that lines up nicely for that golden zone, and that's 60 minute retracement. So if price was to retrace, I might actually just take this trade. 132.400 will be my trade in the week off that low. But there again, like I mentioned, there's nothing stopping price from having a shorter correction. So 38.2 on the fib if you do still use it before the overall continuation. I'd like to see 134, 134.50 by the end of the week, which would be really, really good. So that was my target for last week. Let's put this out there, 134, let's go 134.50, why not? 134.50, target for the end of the week. So you're looking at a good risk reward from the lows, or depending on where it retraces. So your whole goal should just be to wait for where money flows back into the currency on that. However, your highest probability is definitely from 132.50. So personally, I'm waiting for that, and then you're looking at a nice little 200 pip trading to highs if you're willing to hold it. A good 5 or 6 to 1 risk reward, depending on where you tuck your stops. Gold had a very, very big decline yesterday, so I'll just run through this and why it happened. Now, if you remember correctly what happened in the first lockdown, I'll actually go back to that. It was in March. Yes, there we go. March. Gold, very bullish, safe haven, etc., etc. Once the first lockdown happened, what happened to gold? And that was the exact same time that we saw that big decline in oil.